Hey guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about a more recent favorite stock on the YouTube channel. In fact, on July 18th, I made a video about this company, and it has over 10,000 views. That's ridiculous. I assume we're going to have some repeat customers for today's video, but I titled that video, "This $4 stock is set to explode, my secret stock." And as I said, 10,000 views. I don't know if I can call this my secret stock anymore, but in the thumbnail, I called this company 702% undervalued. But as I sit here today, I've made some changes to my valuation spreadsheet as a result of some new changes the company itself has made. And I now believe the company is 885% undervalued, and that's even after this huge rally we've seen since April 25th. Since April 25th, Flux Power is up almost 60%, and since I posted that video on July 18th, the stock went up about 15%, and I think that had a lot to do with the video I posted. If it was up to me, I would really appreciate the stock to keep falling like it is right now. Because when I uploaded that video, you see, I wasn't done buying the stock, and then all of a sudden it went up 15%. So hopefully I can get some more cheap prices around the $4 range. For those of you that don't know, Flux Power, ticker symbol FLUX. It's really easy. Flux Power is a lithium-ion battery manufacturing company. They manufacture lithium-ion batteries for warehouse robotics, forklifts and lift trucks, energy storage at solar-powered electric vehicle charging stations, ground support equipment at airports. They're in a bunch of different segments of this battery industry. And let me tell you a little bit more about why I'm excited about this. As of today, there's only around an 8% estimated lithium-ion market share of electric forklifts, so there's a lot of room we can make up there. And this is a $2.5 billion addressable annual market for electric forklifts. Every single year, this is a $2.5 billion opportunity for electric forklifts. Not all forklifts are electric. So this total addressable market actually is much higher than this $2.5 billion opportunity that the company lists out in their investor presentation. Also, the ground support equipment side of the business, an estimated $400 million plus market size of internal combustion ground support equipment, or GSE, which can be replaced by electric GSE. As of now, only 15 to 25% of airline GSE fleets are electric, which means, mathematicians out there, 75 to 85% of fleets are still internal combustion, which will be replaced by electric at some point in the future. So hopefully that gives you a really brief overview of why I'm so excited about this company. If you want to dive deeper into the basics of the company, go watch my first video I made, that $4 stock that's set to explode, or whatever I titled that video. Click the eye top right hand corner, it'll take you there. And also, if you are new here or returning and not yet subscribed, join the fun, it's free. Hit the subscribe button for me, it is much appreciated. But let's go ahead and discuss some things I didn't mention in the first video that needs to be mentioned, and some of this is some new information that's making this company even more efficient. First of all, on April 13th, so several months ago, they announced they were opening a strategic support center in Atlanta to accelerate customer expansion. Sounds like a relatively small headline, but trust me, it's not, because this company's headquarters, this company's manufacturing facility is located in California. So if any of these battery packs here on the East Coast needed servicing or replacement or work done on them or anything to do with these batteries, they had to be shipped back to California, or they had to be shipped to the Ohio service center that this company had. But now we're going to have one located directly in the Southeast, in the heart of Flux Power's customer base. They say that the Atlanta facility will enable fast response times to Flux Power's global Fortune 500 and 100 customer base, while also materially reducing costs associated with personnel travel and shipping of battery packs to and from the company's headquarters in California. This is what I'm talking about. Those personnel costs, those shipping costs, those add up when you have, over 18,000 battery packs that were shipped last year out in the field today. The CEO goes on and says, over the past 4 years, we have experienced high annual double-digit growth, driving the need for expansion to supplement product product support and infrastructure. Investment in the Atlanta office broadens our geographic footprint to bring comprehensive and responsive services to customers in the eastern half of the US, while also, and importantly, resulting in lower service logistics costs incurred by our company. These Fortune 500 and 100 customers of Flux Powers are sticky customers. They did not buy battery packs and leave. They're placing more orders, and they're working more and more with Flux Power. And I covered in last video that these customers, these largest companies in the world, actually want Flux Power to expand into Canada and Mexico at some point in the future because they trust Flux Power and they want Flux Power to get bigger so they can do more business with them. And then the latest press release we got came on August 3rd when they announced they closed a new, $15 million credit facility with Gibraltar Business Capital. Say Gibraltar 5 times fast. Again, may seem like a small headline, but it's not. Flux Power previously received financing in their line of credit through Silicon Valley Bank, which, oh my gosh, it keeps popping up. With Silicon Valley Bank, which we all know, that was kind of the cause for concern in the talk of the talk in March when Silicon Valley Bank failed. But the new interest rate that they are receiving on this line of credit is the SOFR rate, or the secured overnight financing rate, plus 5.5% per annum, 5.5%. And the current SOFR rate today, you can just Google it, is 5.3%, which means on this line of credit, they're paying what? 10.8%. They also have the opportunity to increase the facility to $20 million. I don't know if they will. They don't necessarily need to at this point. The CEO said, the terms of the new facility are favorable to Flux Power and enhances our borrowing capacity at attractive rates to provide greater financial flexibility to invest in internal initiatives and support our next phase of growth. And I actually did the math here. Their old credit facility with SVB, they had a total capacity or draw of $14 million, and their interest rate was the prime rate plus 3.5%, which equates to around 12% right now. So with this new deal, they are saving about 1.2% in interest expense every single year. So if they draw down $10 million a year on this line of credits, they're saving $120,000. Maybe $120,000 doesn't sound like that much to you, but it's these small things. Opening a service center in Atlanta, signing a new line of credit that saves you 1.2% interest every single year and gives you increased borrowing capacity. These are the things that really signal if a company has staying power. These are the things that the best of the best companies focus on. You know, most other companies wouldn't even worry about trying to refinance their line of credit to save 1.2%. But Flux Power is. And to get profit margins of companies and net incomes to grow, it's usually these small things that accrue and add up over time. Rarely does a company make one big change and all of a sudden they become profitable and grow their profits 20% overnight. It just doesn't work like that. And this is just another reason why I believe I have found a hidden gem here with Flux Power stock. And remember, the CFO mentioned that this line of credit is intended to help meet our anticipated capital resources to fund planned operations to meet the aggressive growth trajectory for the foreseeable future. Most companies right now have resorted to diluting shareholders. With Flux Power, dilution is not a risk for shareholders right now, and I don't think it ever will be. We can look at their most recent 10Q, and we're going to get an update on this when they report their new earnings report, but I'm guessing it's going to be the same. From December 21st of 2020 through March 31st of 2023, the company sold an aggregate 1.3 million shares of common stock at an average price of $11.60. Throughout this entire bear market, unlike basically any other high-growth company out there, Flux Power has avoided diluting shareholders. And again, this is a direct result of all of these small changes and improvements in efficiencies that the company has carried out over the last couple of years that they've been able to avoid diluting shareholders when their share price is undervalued. As far as I'm aware, Flux Power only has one direct competitor that's publicly listed called Electrovaya. They are a $133 million company, and if we look at Flux Power, they are a $79 million company. So Electrovaya is not that far off from having twice the market cap of Flux Power, but let's look into this. Over the last 12 months, this company has had $32.5 million of revenue. Their quarterly revenue growth year over year was 143%. Very, very impressive. They had $5 million of gross profit. They had negative $1.5 million of EBITDA. All of that looks good, but their balance sheet, $500,000 of cash and $20 million of debt? These companies more than likely will grow in tandem with very similar growth rates. And Flux Power is a very similar company, but it's valued at half the valuation. Over the last 12 months, Flux Power's done $65 million in revenue, which is only 15% revenue growth year over year in the quarter. They had gross profit of $7.3 million, negative $6 million of EBITDA, and their balance sheet is not great, but it's still much better than Electrovaya's. They have $800,000 of cash and $13 million of debt, which is all attributable to this line of credit. And over the next several years, I have this company maintaining a 35 to 40% revenue growth rate every single year, churning a massive profit with a net income of slightly over $12 million. And that is going to double again in 2025 to over $22 million of net income. Moving forward, I'm still assuming annual recurring share dilution of 5%, though I think it's going to be more like 0%. So keep in mind this kind of keeps my price targets limited somewhat, but the changes I've made is for 2024 and 2025, I am no longer considering a price to sales valuation, because in 2024 and 2025, they should be extremely profitable. And price to earnings valuations tend to be more accurate. But for this year in 2023, I'm still taking into consideration the price to sales valuation rather than the price to earnings valuation, because this year I only expect the company to churn out a very, very small profit of around $740,000. What this leads to is my personal opinion that the fair value of the company this year in 2023 is $19.61, in 2024 is $27.23, and in 2025 is $47.68. So over the course of the next 3 to 4 years, I expect to see 890% return on this investment in Flux Power. Now, this is a very good time to remind you that I'm not a financial advisor. These are my own thoughts, opinions, and ideas. This is my own valuation spreadsheet. This is what I personally value this company at. It doesn't mean it's correct, but if you do want to download this spreadsheet, it's available to all of my paid monthly members. You can join by hitting the join button down below or clicking the link in my pinned comment to Patreon and join through there. You can download this spreadsheet and change my numbers, change the revenue, change the profit, change the net income, change the price to sales and price to earnings multiples. Do whatever you want to do to come up with your own valuation. In today's video, I simply explained my personal valuation. I believe this company is still tremendously undervalued. But with that, if you guys are new here or returning and not yet subscribed, don't forget to subscribe down below. Leave a like if you enjoy this type of video. With that, stay blessed, keep 10 toes to the ground and your chin up. Peace out.